Welcome to the daily insights that matter. Now, amidst the chaos in the oil market and the imposition of sanctions on Russia due to its invasion of Ukraine, India has emerged as a huge beneficiary by procuring discounted oil from Russia. Let's discuss this today. India's imports of Russian oil have surged to a record-breaking level of approximately 1.95 million barrels per day in the month of May, leading to reduced purchases from the conventional suppliers. Now, Russian oil now constitutes around 40% of India's crude oil imports, marking a significant increase. Meanwhile, imports from Iraq have reached a 3-year low, and the imports from Saudi Arabia have hit their lowest point since September 2021. Now, this decline is of course attributed to India's higher acquisition of the discounted Russian oil. Now, the Middle East, which has traditionally been India's primary source of oil, experienced a notable decrease in its import share, dropping to an all-time low of about 39% in the month of May from 44% in April, according to data. Moreover, OPEC's share of India's oil imports in the month of May reached a record low of 42.6%, averaging 44.3% during the first 2 months of the current fiscal year. Now, the surge in crude oil prices has a direct impact on various aspects of India's economy, including inflation, foreign exchange outflow, and the fiscal deficit, as the country relies on imports of over 80% of its annual oil requirements. However, the discounted crude oil imported from Russia has played a role in helping India mitigate inflationary pressures and manage its fiscal deficit to some extent. Additionally, India has experienced a substantial expansion in its exports of refined petroleum products over the past year, thanks in part to the availability of discounted Russian oil. Now, this increase in exports has been particularly noticeable in countries such as Argentina, Ecuador, Egypt, Iraq, Mauritius, Nigeria, Sudan, as well as various European countries. Now, amidst a decline in global oil demand and the efforts to stabilize prices, OPEC and Saudi Arabia have taken steps to reduce production. Now, this action carries the possibility of impacting the oil prices. Given that India imports more than 80% of its crude oil, this could offer some relief as far as we are able to procure discounted oil from Russia. However, the decision made by OPEC, particularly under the leadership of Saudi Arabia, wield significant influence over the global oil prices, thereby raising concerns for India. Now, India and the member nations of the Southern African Customs Union, which is the SACU, are embarking on an exciting journey to explore the possibility of a free trade agreement. Let's first understand what exactly is SACU and what is its relationship with India. Now, SACU, consisting of Botswana, Eswatini, Lesotho, Namibia, and South Africa, is the oldest customs union in Southern Africa. These 5 vibrant countries are known for their rich supply of raw, primary and semi-processed commodities, and their union presents significant opportunities. In the fiscal year FY23, the combined exports from these SACU countries to India accounted for around 2% of India's total exports, with a value of approximately $8.91 billion. Now, India has been actively engaged in establishing several free trade agreements in the recent times, and a potential trade deal with African nations could offer valuable opportunities to access broader markets for its goods. Now, this development comes at a time when India's merchandise exports have been declining due to a slowdown in demand from the Western countries. Now, it is crucial for India to diversify its exports because currently 40% of its export orders come from just 7 countries, making it more susceptible to external shocks. Now, at present, the United States and Europe account for 1/3 of India's merchandise exports, and they have been driving the force behind outbound shipments over the past decade. With this new endeavor on the horizon, India is prepared to expand its reach and explore untapped markets, thereby reducing vulnerability and broadening its trade prospects. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com